The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. All right, we're going to be talking with Ed Carlson from the Seattle Technicians Association. He's a terrific cycle fellow that does the work of George Lindsay, a very famous person from the 1940s, 50s, and 60s and 70s. George Lindsay died on the top of the market on August 25th of 1987 in his 80s, but we'll have Ed on at that time. Now, also, what I try to do here, folks, I try to bring in some guests here that can help us, get some ideas. We got some cycle people coming in, and then on next Thursday, February 4th, I'm going to have Adrienne Togaray from Trading on Target. She's one of the premier psychologists, and psychology is very important in the trading. When I worked at Commodity Corporation during 1985 and 86, there in Princeton, New Jersey, they had a full-time psychologist on staff, and believe me, she was very well paid and did a great job. They had two rules there. If you went through a divorce or there was a death in the family, you were automatically put on a sabbatical for 3 months. You were paid your full salary, but there was no trading. And then after that 3-month period, you were under a peer review where two people were selected to check your trades, your equity, to see what you were doing, to make sure you weren't breaking any rules. And then after that period, you were free to go on and do your own thing. But they watched it very, very closely. As most of you know, I think it was in 1997 or 1998, Goldman Sachs bought Commodity Corporation for a lot of money, and mainly to buy their automatic trading system that Amos Hofstadter and Jay Cross had developed over the years, because it never had a losing year. It never had a drawdown more than 6%, and it was really quite an amazing program. Okay, and it was basically based on volatility breakout. Someday I'll go through, because Jay was one of my very closest, well, he was my closest friends until he died in 1997 in an auto accident, but he was involved with that whole process. And I'll go through some of that stuff. But today, we want to talk about this. Now, those of you that got the memo yesterday right before the close about selling Amazon right before the close from our good friend, Mr. John Logan. No, I'm just teasing you, John. Anyway, I wanted to show you this chart because you want to see a technical chart that's really interesting. This has got to be it. If you like Fibonacci and stuff like that. But look at Amazon since it topped back in on the 28th of December. It broke down, and yesterday's high was an exact 61% retracement at 637.94. That was the high yesterday. And then you can see what happened. It had a beautiful ABCD pattern there that measured perfectly. And this is a 4-hour chart, so there's a lot of time in between these things. So it's a very interesting one that looks pretty good. So if you'll bear with me here 1 second, my beeper is telling me that oil is getting ready to go higher, which we've been expecting for some time. And we'll say, if you give me a second here, I will get the Amazon chart up. I'm doing too many things at once here. Hold on here a second. There we go. It'll come up here right about now, and then we will... Okay, there we go. This is the chart of Amazon, and you can see the ABCD. That's a Gartley pattern because you have the ABCD swing coming in exactly at the 61% retracement. Now, the pundits will say, well, it could have gone to 662. Well, of course it could have. Anything could happen. I'm just showing you this because this is what happened. And that's what you have to decide. But when you have two major numbers there, the ABCD pattern and the 61% retracement, I wouldn't want to be long there. I'd rather buy it on a pullback. And I think they gave you a pullback because it dropped $85 overnight. It's since come back a little bit, but the market's actually holding up relatively well, given to the fact that where we are now. I wanted to show one other thing, and this is something on pattern recognition that we look at. Before I do that, I want to show you how the timing of some of these things can be very, very helpful. Now, what I'm going to do is I'm going to put up the lunar cycle chart that Shane Smolian from wolftrader.net sent us, and if you'll notice here, the chart that is showing the lunar cycles of highs and lows. This happens to be the soybean chart, and that's what we're looking at here. We're just looking at the lunar cycles in soybeans. And so the next thing I want to do is I want to come in and I want to bring up the soybean chart and show you where we are in relation to that, because what you'll see is you'll see that the market topped on January 20th. That's when the lunar cycle first topped. And then you'll notice that we have those little bubbles that you see there, those little cycles. That's nothing more than a timing indicator looking from cycle to cycle. And that is the 135 pattern. 1 is on January 20th. Number 3 is on January 23rd. And number 4 is on January 27th. So you're basically looking at a 3-day cycle. And now it's come down, and so we'll be looking for a bottom in soybeans based on this lunar chart sometime in early February. And guess what today is, folks? Today is the 29th of January, so we're very, very close to early February. This is a big time here in Tucson, Arizona this week. This is our busiest 2 weeks of the year. We have the Tucson Gem and Jewelry Show. It lasts for 2.5 weeks every year, and jewelry dealers from all over the world, about 30,000 of them, descend on our city, and they have these huge, it's all basically wholesale, and they have all kinds of various venues of things that you can buy. These are the people that buy for the boutiques and the jewelry shows, places in Las Vegas and stuff like that. So that's what we're watching as we start today here. Now, I wanted to talk a little bit about a chart that someone sent the room here. This is a chart from Harry Dent. Harry has been around since quite a while, I think 25 or 30 years. And basically what we're looking at here is a long-term chart of where he thinks the Dow Jones is going to go, and he's looking at 5,500 to 6,000. Well, I don't know if it's going to go there, neither does he. We'll see. But we'll wait and see if this comes out. But this is just one of the main thing is if you look at that ABCDE pattern, that's nothing more than the 1, 2, 3, 4, 5 expanding triangle, the T6 pattern in the market that we looked at so many times. So that's the main thing that we're looking at right here. Okay, now we're going to take a little break, and then after that we're going to try to get Ed Carlson on.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've got Ed Carlson on the line from the Seattle Technicians Association. And Ed, are you there?
Hey, Larry, how are you?
Good to hear from you, my friend. Listen, some of the folks have not heard of George Lindsay before, so why don't you give us a little synopsis of how you got involved with Lindsay and a little bit about his life, and then we'll go through the really cool-looking cycle charts that you sent us. Could you send that along with us, or tell us what about him, and then I'll post them as we start to talk. Oh. Go ahead, tell us about George Lindsay.
I'll do my best. Let's see, it's been about 6 years, I think, since I first discovered Lindsay. And, of course, once you discover something, then you start to see him everywhere. He shows up as a footnote in an awful lot of technical analysis books. But, like most footnotes, we just kind of breeze over them. But, yeah, I was introduced to Lindsay by Peter Eliades, who mentioned him in a discussion I was having. And it sounded interesting enough that I started looking around for some background information on him, and found enough that I got interested enough to write a book on his methods, which are quite different than standard traditional technical analysis. I mean, it all works, the same basic ideas, but rather unusual. And so I've spent the last 6 years at my website, Seattle Technical Advisors, publishing research-based using the work of George Lindsay. Lindsay was born in the early part of the 20th century. He passed away in 1987. You can see an excerpt from an interview he did with Louis Rukeyser on Wall Street Week at my website, SeattleTechnicalAdvisors.com.
Okay, Now, the first chart that is mentioned, Peter Leides. My guys have known Peter 50 years. He lived in the same building that my very good friend Ed Horowitz lived in up on Coahuila in North Hollywood. And I used to see Peter all the time, and I still in contact with him. Boy, he's a tremendous technician and a really nice human being too. But the first chart that we're looking at here is the election year chart. You want to go through this one and tell us what you're looking at here and what you're thinking will happen?
Sure. Just before I do, there must be something about Hollywood, because Lindsay lived in Hollywood also in the 1940s. But, anyway,
oh my.
Yeah, this is a chart from our friends at UBS in Zurich, Switzerland. The red line, what you're seeing is the typical seasonality of the equity market during election years, the average election year. And you can see that there's a slight pullback early in the year. Then in March, that's March, you get a rally into a high in April. Then you get another pullback into, I believe that's May. And then you get the rally for the rest of the year, where you end the year much higher than where you actually began. However, the people at UBS did something interesting, and they took a look at just what is the seasonality of the 8th year of presidential elections, 8th year of a presidential term, which, of course, is a presidential election year, like this year, but only when it's the 8th year of a presidential term. Again, we see a pullback, a little sharper pullback early in the year, and a low early March and a rally into April. And then we get into a decline that just doesn't stop. So that's interesting, because that matches up with our Lindsay work, which says we should get a low, but we should be looking at a minor top come Monday, or near Monday, either side a few days. It doesn't look like we're going to get much of a top, though. And then it should fall down to March 1st, and then a rally into April 1st. And then the decline that started in earlier this year, first of the year, should continue. And that's all based on several Lindsay's methods. His favorite method being middle sections.
So long term, that's a bearish indicator then that we're looking at from the 8th year of election cycle.
It sure is.
Okay. Now the next one we posted in here. You want to go and talk to us? Just talks about these cycle tops that you've talked about here.
This is a little shorter term. I mentioned what my interpretation of using Lindsay's methods was pointing to a high on Monday, a low not until March 1st, and a high on April 1st. Well, what do you know? We've got some 21-week cycles that are telling us pretty much the same thing. That first chart you've got there with the red lines on. No, that's the blue lines. Okay. It points to a high during the final week of March. You can see that it's done a pretty good job of pointing to highs. But the final week of March, that's close enough to my Lindsay forecast for early April 1st that we can take some confidence in that forecast. And if you want to move to the next chart, I believe the next one has the red lines. It's a 21-week low cycle low.
Mm-hmm.
Got that there?
Yes, I am. That's just a 21-week nominal cycle. In other words, that's a cycle that seems to be fitting as a normal cycle. Is that what that is?
Yeah, nothing fancy.
So it's not expanding or contracting with Fibonacci numbers or anything like that.
No.
And you don't. The Lindsay does not talk anything about astral cycles or anything like that, did he?
No.
Okay, good. I just double checking.
He didn't even use cycles. This is just my own work here, and the reason I'm sharing it is because it matches up with the Lindsay work. Looking for a low. The Lindsay work's looking for a low roughly June 13th. And what do you know? Here's a 21-week cycle. It's done a pretty good job, and it's looking at mid-June as well. So just thought I'd share that one.
Okay. One other question that I wanted to ask you. We're going to come up with a break pretty soon, so stay with us because we'd like to have you on the air pretty good for a little bit longer. But did you ever get to, he passed away, probably 15 years or so ago, was Jerry Favors out of Columbus, Ohio, because Jerry did a lot of work with the Three Peaks in the Domed House when he was alive. And, boy, he was really a good technician. I don't know if you ever had a chance to meet him or not.
No, I
Yeah, his wife held it for a while. His wife was Lindsay, and she actually enjoyed trading more than doing the newsletter and stuff. So she basically just traded, and that was it. But he did a lot of work, but not as comprehensive of what you're doing. So let me. Sorry for interrupting, but these are memories that I have, and old people, we gotta talk about our memories now, or they fleet away too quickly.
Okay.
Okay. Okay, the next one we're going to look at here is this is one of my favorites. I like this one because this is wave type stuff. And if you'll give me a second, I'll put it in here and then we'll talk about it. We're going to have a break here in about 45 seconds. So we'll get started with this one and then we'll continue it later.
Yeah, okay, good. That's a good place to take a break too. This is a template Lindsay created for what he called his long cycle. What he did was found what were approximately 20-year cycles in the Dow Jones or predecessor, all the way back to 1798. And you can see how it breaks down here. These moves like ABC, you call that a basic cycle. CDE, that's a basic cycle, et cetera, et cetera. And this is how the 20 years broke down. And he also broke it into two multiple cycles. So from A to D to E would be the first multiple cycle, from E to J to A, for example, would be the second multiple cycle. So each long cycle is composed of two multiple cycles, and each multiple cycle is
okay. Ed, we've got a break coming in now, so stay with us. In a couple minutes, we'll be right back with you, okay? Hang in there. Ed Carlson, Seattle Market Technicians Association.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Ed Carlson of the Seattle Technicians Association. This is the long-term cycle that we're looking at with all those ABCD patterns. I mean, everybody here at TFNN listeners, we're certainly familiar with ABCD. Now, the next one that I posted is more of the things that we really like to see, and that's the timing of this. So you want to talk to us about that long-term cycle chart that you have up there?
Right. Well, and by the way, where we're headed with this is trying to forecast the end of the current bear market, which we believe started back in May of last year. That was the end of the bull market. And so the question becomes, where's the end of the bear market? All right, so what we're doing here is we're trying to forecast the end of the long cycle. So what I've found in using Lindsay's work is that we can use his middle section forecast approach, and I don't think you've got time for me to get into that, but I can show you how it's worked in the past. So, for example, here's the second half of the long cycle from 1921 to 1942. And you can see that by centering the forecast on that high, I can't even read it. It's too early here on the West Coast for me to be able to read yet. But you can see how well it did. It looks like the forecast called for a low 1,882 days later, and the actual low or end of the long cycle occurred 1,875 days later. That worked out pretty good. And if you go to the next chart, and what we're going to be showing is the next, what I call bear long cycle. This is 1962 to 1982. And by the way, what these have in common is that they end up awfully close to where they started. Unlike the long cycle from 1942 to 62, which ended significantly higher than where it started, and of course 1982 to 2002 also ended significantly higher than where it started. And I call those bull cycles. But these are bear cycles. It seems like the bull and bear cycles tend to alternate. So anyway, here's the, you've got that up. This is 62 to 82. And you can see again how close the forecast was for the final low of the cycle. You can also see that the final low was not the lowest point of the cycle. And by loosening up our minds a little bit and thinking a little differently, it sure helps with forecasting these long-term cycles. Okay, so if these cycles alternate, which, by the way, Lindsay did not say, but when he wrote his paper in 1950, it was too soon for him to realize that, because since 1798, the work he'd done, they had always been just like the template I showed you, and they never ended significantly higher like they did in 62 and 82. Mm-hmm. So now we'll take a look at our current cycle. If these cycles alternate, then our current long cycle should be another bear cycle. And so we're trying to forecast, okay, when is the low coming for this bear cycle? Well, we've got a forecast from a 12-year interval, and I won't go into that, but suffice it to say that's how Lindsay, that was his first step in forecasting lows. And if we count from the high on March 7th, 2005, which is point B of our long cycle, it forecasts a low in the period of May to November 2017. And you know what? I've been talking about point M, trying to forecast point M of the long cycle. I'm sorry. We're trying to forecast point K. And maybe we can go back. It's next to the last low of the long cycle. Again, a little early for me here. Sorry, Larry. I hope I'm not ruining your program.
No.
Okay,
you're spot on. I can see it, and I think the people are saying it's interesting, so this is what we want to hear. So fire away.
Okay, well, we'll wrap it up with this, and that is I found a middle section in late 1997, and the measuring point, what he called point E, on. Actually, you know what? Have you ever noticed how early October it always seems to be an important high or important low? I mean, you can see there that high in 2007 was October 11th, and the low in 2011, what was that? It was October 4th, and October 10th, 2002 was low of the bear market, or the end of that long cycle. Well, so here's where it gets weird. We've got a middle section back here in 1997. It counts 3,654 days to the high of October 11th, 2007. So now we're trying to forecast point K. And where do you suppose it counts to? 3,654 days later, forecasted low on October 10th, 2017. So, I don't know. Is it all coincidence? You know about these things better than I do.
Oh, I hardly think so, my friend. You do a fabulous job at this, but this fits in with what I'm thinking too, because the markets had the worst January start in a very long time, the worst January 1st since the history of the market. But it looks to me like we are going to have a pretty big correction. Now, we were talking earlier before we had you on the air about Harry Dent, and Harry's talking for 5,500 in the Dow. And that's based on some work that he does, but of course he works with the process of fear, and he scares people. But there is a possibility he could do it because the market gave back 60% of its value, into the 2008 bear market, and we haven't been in a protracted bear market, since 2002. When we topped in 2000, we didn't bottom again for 2 years. So we could easily see 2 years down in the market.
Yeah, the 2007 top into the March 2009 bottom, that was just, at least in Lindsay's long cycle, that was the decline of the first multiple cycle, which we would expect to be big, but it's not a terminal decline, not the kind of decline we're looking for now from high at point J to low at point M or A. This is the big one that comes every 20 years, assuming, Lindsay would have said every 20 years after every long cycle you get a terminal decline, and it's a big one. But the problem is in the 20th century, these things started alternating between what I call these bear long cycles, where it met Lindsay's template, and what I call a bull long cycle, where, again, point M, the final low, was significantly higher than the beginning of the cycle. I have a sneaking suspicion this has something to do with central banking, at least this current iteration of the central bank. For those listeners who don't realize this, central banking's been with us a lot longer than our current, what year did that start, 1914, current bank? But Congress sometimes reauthorized central banks, the central bank of the United States, and sometimes they didn't. So we've been both with and without central banking in the 19th century. But I have a sneaking suspicion these new kind of bull long cycles that end so much higher than where they began. I got a sneaking suspicion that's connected to the Fed, but that's just me blowing smoke. Don't know that.
Okay, that makes good sense. We've got about another minute to go. Why don't you tell the folks how they can reach you and get some of these charts that we talked about today, and you can give them an idea of what you're doing? Oh,
well, sure. There's a couple ways. Well, there's one way to get started, and that's goes to the website. That's SeattleTechnicalAdvisors.com. And at the website, if you want just a taste of what we're doing before taking an annual subscription, find out if you have any interest in that. You can, a couple different things. You can pick up a copy of the current Lindsay report that's published monthly, or you can take a trial subscription. And either option's available. Welcome anybody to take a look at the website. Look forward to hearing from you.
Okay, well, listen, we want to thank you for being on the show today, and we'll have you on in another few weeks, because I've always enjoyed Lindsay's stuff. My good friend Arch Crawford actually knew him when he was in New York. So thanks for joining us, Ed.
Thank you, Larry. Have a good day.
You bet. Thank you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives.
If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're going to talk about some of the things that are happening in the economy. This is the chart that I just posted in here. Comes from the Federal Reserve, and it shows the different student loans, food stamps, federal debt, labor participation in the workforce, incomes, home ownership, and things like that. And you can see that we do have some problems in here. And I think the one that really we should focus on, of course, is the one on money printing. That's the second chart in the first column. That shows you what's been happening. We've posted this into TFNN several different ways, but this is what's really occurring. Back in 1980 is when American Express really started to do their big promotions with credit cards, and then of course MasterCard and Visa came out about that time, and they were during that time the biggest credit cards were American Express and Carte Blanche, and I don't even know if Carte Blanche is still doing it or not. But I wanted to show you the pattern that we have going on now. It might not work, but this is the one that's mother, God, and country stuff, folks, if this is what you like to look at patterns. And that is the chart of the Treasury bonds over the last several weeks. You can see here that we have a beautiful ABCD pattern. And it is suggesting that we are going to be making a double top in bonds at least for the next 4 or 5 days. We've taken out the high of January 20th by 1 tick. That high was 161.17. The high today was 161.18. It is a perfect ABCD pattern starting in January the 22nd and to where we are today in both time and price. So keep an eye on the Treasury bonds. Whether that has anything to do, with the strength in the early strength in the stock market or not, remains to be seen. But keep an eye on these Treasury bonds because they have a chance. Longer term, they are going down. Interest rates are going to be going higher. Now, if we look at the longer term chart of the Treasury note, which is the largest of any of the commodities that are traded, more things, but the trouble is it's very lower volatility, but this is a huge market. You can see where we are right now. The notes are still lagging behind the bonds a little bit, but the pattern for the bonds is very clear, at least for the next 5 to 7 days. That's what it looks like from a technical standpoint. Now we need to talk a little bit about the gold and the crude oil market. We were looking for a potential top in that gold, as you recall, up around that 1130 level, and we got to 1128 and change. We've only backed off about $17 from that high, which is not very much. Silver's backed off a little bit more, and platinum that had hit the 786 up there at the 883 level has backed off about $20 also. So this is going to be an interesting chart here over the next few weeks. But in order for gold to be bullish, we need to get it to close above that 1128 level, and then we could really start to see something really big happening. My personal feeling is, and this is just my opinion, of course, and we know what opinions are, you have to think about this money supply thing, because this is not a good thing what the Federal Reserve did. And when you stop and think of the student loan debt that's out there, and a lot of people are, just barely getting by because of the, losing their jobs in one industry because of the technology, and they've not been able to get back to that same level of what we're looking at. So that's what we're watching. Now I wanted to give you an idea. I talked about platinum, and I do want to bring that chart up here because it's important, even because it's also one of the big industrial metals behind automobiles. And you'll notice here the blue line is the gold, and you can see it making the big ABCD pattern, and platinum is lagging badly, much like what silver is doing. So you've got two industrial metals, silver and platinum, lagging the precious metals. So this is just a time to watch it very, very closely. That 1130 area, 1128, if that was the high, is going to be a very, very interesting spot to look at, folks. Oh, by the way, we're going to have 3 guests next week. I wanted to mention that. On Tuesday, we're going to have Stan Hartley. He's a friend from 30-some years ago, 40 years, back at Conti Commodities in the old McCulloch Oil Building there in Wilshire Boulevard in Los Angeles. And then on Wednesday, we're going to have Rich Anderson on, and from Anderson Capital Management. On Thursday, we're going to have Adrienne Togare from Trading on Target. She worked with Van Tharp for many years and has been out on her own doing a spectacular job, and she's a very well-spoken and extremely adept psychologist, especially as it comes to trading, because that's her specialty. And so she'll have some really good things to talk to us about, because trading, as Mark Douglas said, is 90% mental. And like Yogi Berra said, it was 50-50 or something. I forget what the quote was, but he said it's 90%, it's 50-50 with 90% mental or something like that about baseball. But I don't remember the exact quote, but it was one of the great yogiisms ever. So we're looking at the market this morning. We've had a little bit of a bounce. We're getting up to this area in the S&P. The area that we need to clear, the old high was at 1912. We're trading at 1901 right now. Whether we're going to be able to exceed that, we'll have to wait and see. As far as crude oil is going, we hit the 61% retracement just the other day, 2 days ago, at the 36.08 level. We could only back off a dollar and a half from that level down to 34.66, and now we're approaching back to that same level again. So we need crude oil to get above the 36.50 level to start it moving higher. Folks, this market is making a turn. It really is. We've been talking about it for a long time. That long-term cycle of 15 weeks down on the weekly chart that we posted several times here in TFNN is in force right now. We've already rallied from 27 to 35. I mean, that's an $8 rally there. So something big is happening. It might not be much of a rally. Maybe it's only $10 more, but it could be even greater. So we'll have to wait and see, because we don't know, what these things are going to be giving us. Now, we did have a big rally in the euro the last couple of days. It rallied about 180 pips in one day, and it's given almost all of that back today. So that's telling you that King Dollar is put on its hat again, and it's ready to rock and roll some more, is what it looks like from me. The support that we're looking at in the gold market, one of the questions that's been asked, I believe the first support should be coming in at around 1108. That would be the first area that I would be looking at. And then below that, the harmonic number in gold is 34. So from we went to 28, you subtract 34, so 1096. That's the number that you want to watch, because if gold goes below 1096, it's in trouble. It should not get below 1096. 1100, which is a semi-magical number, only because it's an even number, will be some support, but 1096 is the number you want to watch in the gold market. And as we've mentioned, I'll mention it again, silver and platinum are lagging badly. I've got to have a little break coming here, I believe, soon, and then we'll see. There we go. Wow.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and the folks at TFNN were kind enough to give me the quote by Yogi Berra, and he said baseball is 90% mental, but the other 50% is physical. So he was a real, what a great baseball player he was, but a great human being. I met him twice in my life, once in 1969, and I met him again in 1983. But one of my favorite stories about Yogi Berra comes from Vin Scully, the voice of the Dodgers for 60 years, the Los Angeles Dodgers, and he tells the story, but I was interviewing Yogi Berra, and Berra, they were talking about something that happened in the World Series. There was runners on second and third with 2 out, and that would have ended the game. And the ball was hit to the Yankee first baseman, and instead of just stepping on the bag for the 3rd out, he whirled in a 360-degree motion and fired to home plate. And there was Yogi sitting there waiting for the throw to tag the guy out coming in from 3rd. And when Vin Scully went to interview him, he said, Yogi, how in the world did you ever know that he was going to do that? And Yogi said, Vinny, he said, when you play with dummies, you have to think like dummies. And that's the way it goes. Anyway, we're going to have some really good things on Thursday. Well, we'll have things on Tuesday, Wednesday also, but Thursday we really want to listen to Adrienne come on, because she'll talk a little bit about the psychology. The main reason people lose trading, folks, is they put their stops too close. That's one thing. Second thing is they don't use stops at all. That's because they don't have a trading plan. So you need a trading plan. You need a perception that you can beat the market. You don't necessarily have to be right, but if you have that perception and you can manage your money and keep your losses small, you're going to be okay. Because if you can stick with this, it's a heck of a business to be in, but it does take a lot of time. Remember, we need oil to get above $37 a barrel to scare a few shorts. We need gold to get above 1130 to scare a few shorts, and then we'll see what happens. 877-927-6648. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.